All right. Hi, everybody. I'm Jordi, and this is Dim.
Hey guys.
We are both crypto traders for a long time. We'll hope to give you guys some of our thoughts, experiences. Hopefully, it's useful for you. And the topic is navigating the volatility. But there's a lot of volatility. How many of you have had your crypto portfolio go down more than 50%?
Not that many.
Everybody else has not had a 50% drawdown.
Wow.
How about like 80%? Okay, so even the professionals, we have to ride the waves. Obviously, over time, each cycle, we're trying to make less and less mistakes, have less volatility. Dim, what's been like some of the biggest mistakes and lessons that you've learned?
So I started trading back in high school. So that's 2017 for me. And
So the other kids were playing Xbox and you're like playing the binary charts. Okay.
basically, and the first experience trading in crypto was on BitMEX with 100x leverage. Thankfully, my bankroll was tiny back then, so I was just like depositing $50, 100x leverage, just blowing it up, going again and again and again, until at some point it kind of stuck to me that there's this thing called risk management, and you need to understand how that works. I think as I matured as a trader, I kept making mistakes, but just different ones. I think I guess the most recent one that I'm still kind of trying to fix is oversizing, just getting a ton of confidence in a thesis or a position, and then mismanaging that actual position because I've oversized it.
Yeah, I mean, psychology, I would say, is half the battle when it comes to trading, especially crypto trading, because of the huge swings. If you oversize and you're on the wrong side of it, the volatility is so reflexive that your loss is much bigger than you imagined. And it's that saying like, you think you have a plan until you get punched in the face.
Correct.
And we get punched in the face a lot in in crypto markets. So sizing, doesn't matter if you're long or short. I mean, obviously, if you're short,
Even worse.
you can lose unlimited money. And we've seen things just with no value go up so much. So how do you think about sizing longs versus shorts?
I think, and you've made a great post about this, that shorting is an art. There are so many things that you have to be careful about when you're shorting. You don't know, if your counterparty is, what information they have, you can literally lose everything shorting. So sizing is always naturally smaller on the shorting side than I would ever have on a long. On the long side, I think the criteria for a short and a long are the same. Like the way that I'm thinking about trades usually is, I need to have a catalyst. So every kind of trade I have needs to be defined on a specific time scale. And I need to feel like I'm very early in positioning for that specific catalyst. If I feel like there has been significant front running, I will definitely try to bring size down or just not position at all and look at the next trade.
Yeah, I really, when you look at entries and exits, I think most of the edge comes from entries.
Yes, 100%.
So
If you get the entry right, the exit doesn't really matter as much. Getting
right,
the entry perfect makes the whole trading experience significantly better.
yeah, I think one of the easiest lessons we can tell everybody is basically there's always another trade. Don't feel like just because everyone's talking about a certain coin that you need to take a position. You do not. There's another trade. You can wait for the right setup. And the question that I always ask myself, am I early or not early? There's a funnel. And, there's a timing to which different market participants enter a trade.
Yes.
There's the really smart money going in first, and then you have like a retail funnel. Obviously, sometimes the trade is so big, the funnel is so big, like the Trump trade. The Trump trade, I would say, is probably like the easiest trade this year, where even if you weren't that early, as long as you were in the first, hours, at least you could do well. But that's a very rare situation. Usually the funnel is small, and especially as the markets get more choppy and most of the retail gets washed away, you might think you're early, but it's literally just you and like GCR and a couple people. So you're not even before anybody else in line. You're just still at the back of the line. You need people to queue up behind you. Unfortunately, this is like the reality of, these metas, the shifting metas.
And specifically, I'd say for Trump, and a more recent example is Aster, right? There was a specific amount of friction to be able to buy that coin, right? You had complete normies buying Trump. They still had to deposit, so, figure out how to buy on-chain. And that's why the opportunity was so extended. And the same with Aster, right? Because you had to bridge the BSC and do that. So I think
it's pretty crazy though that there is still so much opportunity in crypto, where what you're saying is that literally all you need to do to have an edge in the market is just know how to bridge some USDT, in the right place. And that's already enough to make you profitable. So
yeah,
we're still not in efficient markets at all. There's a ton of edge.
yes.
I would say, bottom line, like, think how early you are, get the entry right, size appropriately where you don't stress out that your position is too big. I've seen otherwise intelligent people make really bad decisions once they see like a really bad P&L number. Either they just want to cut their position at the worst possible time, because usually it's sort of, it's the euphoria, either or the fear, and you're cutting at the worst possible time. So going in with a plan is always important. How do you think about metas? So we have, every month or so or 2 months, sometimes the metas last a while. We had like an AI meta in Q4 last year. That was
My favorite meta.
that was your favorite meta? Why is that?
So I think AI is clearly, obviously, the main innovation of our maybe generation. So naturally, what you're gonna have is technological cycles where every year something's gonna come. Last year or most recently, agents, right? There will always be some new technological innovation that will be able to really link well with crypto, and that will bring a new liquidity event and create a rip up on the subsector of crypto and AI.
Yeah.
So we've seen that, right? We had IonNet, Aether, all this infrastructure products first ripped crazy. Then you had, the BitTensors of the world. You had Goat, and then you had agents. I don't know what the next meta is going to be, because it will depend on this like technological breakthrough that will happen. But I want to be positioned because I'm sure it's going to come back.
I mean, most things in crypto are not real. So
Yeah.
we have a new meta. I'm usually skeptical. It's served me well to be skeptical, because usually this stuff is a zero. And the good thing with AI, at least, is that your imagination can kind of run wild, and a lot of people can get mass delusion and they can survive for a while. I think a lot of the other metas, there's always a moment at which the emperor has no clothes. And when the emperor has no clothes, everybody rushes for the exit, because they kind of realize that whatever the thesis was is not going to work. We've had a ton of metas, even ones that looked promising, like Web3 gaming.
Yeah.
That was such a huge
I believed in that for a while.
NFTs. I mean, there's still a role for NFTs. Obviously, we had these hyperliquid NFTs drop. I saw some of them go for $500,000. So still people like these things. But it feels like the NFTs these days, they need to have some utility. It's not about the art or some speculation about utility. How do you think about utility? Is that a meme? We obviously went through a meme coin cycle, but now we're in a revenue cycle. Where are we on the utility?
I think, as you're seeing more institutional participants coming in, they're asking that question. And so naturally, the real institutional capital will only bid things that they feel like have revenue potential, at least down the line. Thankfully, we've had some of these opportunities lately. Obviously, Hyperliquid is a great example. There are more. I think it isn't where you're gonna make like multiples, right? The returns will compress naturally. Most returns will be made during times of extreme euphoria on things that are completely away from this idea of revenue. But we're definitely on the side of a cycle, for sure.
We had a many months of meme coins. I remember I did the meme coin panels in previous tokens. They were fully packed. Everyone wanted to know what Ansem's gonna say, what coin is he gonna talk about on stage so they can buy it. Even Murad's talk, I think, was like the most watched token talk ever. So there is like such a speculation still that people require as like more professional, liquid traders.
Yeah.
Do we look at meme coins like as a real kind of I don't want to say investable asset, but a trading, like is it still tradable, or is it something that you think is very insidery? Obviously, most of the Solana kind of meta died once the insiders got a bit too greedy.
Yeah. I think, meme coins represent a general social force, which is, we're in the generation moonshot. Like, people that are trading these things, and I'm included, like I love trading meme coins on Solana and other chains. We do this because we expect a crazy potential return with a pretty like asymmetric kind of downside. And I think that's really what meme coins kind of reflect. And when you're in a world where everything is being financialized, and you can tokenize everything, this even attention is being tokenized and financialized. This will just keep going. It will just change forms. It might not be, a completely pure meme like With or Doge, but it will have the same kind of ingredients.
Yeah. Let's talk about the apps a little bit. Last cycle, there was a lot of complaints that it's just a bunch of L1s and block space and there's no apps this cycle. So we've had Pump Fun launch.
Yes.
It went down, it went back up, went back down. It feels like that whole kind of launching coins always has some demand. There's some fundamental demand, but it really fluctuates. It's as simple as all the trench people try to go to buy CZ Dex coin and they just ditch. It's like people just move out of the city, go to the suburbs, and then there's no one in the city, and it's really quiet until they eventually come back. And then we have Polymarket. It's a very institutional excitement around prediction markets right now. Where are the opportunities right now, you think, on the app side?
On the prediction market space?
You think prediction market? We don't really have a coin for a prediction market yet.
We don't. Polymarket is probably launching one. I don't know. Is it? I don't know. I'm sure they're thinking about it. So every person that I'm talking to on the VC side in crypto is finding it exceptionally hard to invest in anything other than prediction markets right now. So yeah, I guess that goes back to just financialize everything and, just invest in betting.
So we're having a DEX meta right now, which is funny because DEXs have been around for forever, but it's the flavor of the month. Maybe at some point we get a prediction market meta, but there's not enough coins yet to kind of get that rotation. How do you know that a new meta is forming? Like, is a couple days enough? Is it just that everyone's talking about it? Is that too late? You've seen so many new metas form. When do you know that you're still at that sweet spot?
It really depends on the meta itself and structural components of that meta, right? So you had, for example, on the AI meta, you had GOAT launching, and then it was AI 16Z and a few others, Cerebro. So there were just actually a few launches that took advantage of different parts of the narrative that all made sense. So that's why it lasted for quite a long time. on the Dexpert meta, maybe you have better thoughts on this, but it feels like this is already kind of ending, because you always have to make a sacrifice of KPIs for token price, and so that brings the meta to a pretty difficult spot early on, right?
Yeah, that's a very good point. It kind of brings me to another thing I wanted to discuss, which is there's a new meta every month. As individuals, we all have different backgrounds. Some of us TradFi, some of us meme coins, there's different backgrounds. Sometimes the meta really fits the stuff that you already know about, and sometimes it really doesn't. Like for me, personally, this perp dex meta, arguably, I have as much experience as anybody in this meta for many years. I really understand the mechanics of it. However, if I go 3 months ago and it was a DAT meta and it was about treasury companies raising and doing pipes, and I had to learn what's a pipe and a SPAC and all this stuff, I knew I was out of my water, which is why, I had to rely on you a little bit. But it's so important to know if you have enough sophistication. It's so easy to be overconfident and think that you know enough about the new meta. It's like, when I used to trade macro, every month macro traders were experts at something else. 1 month they're experts at Russian Ukrainian weapon systems. The next month they're biotech virus experts and what's the spreading. And we do have to kind of do that as crypto traders. We have to be quite broad in our understanding. But the difference between, this is your home turf, and now the meta is something that I really know, versus I'm learning on the fly. How do you think about that? I mean, which I remember NFTs, I was like totally out of my system because I wasn't collecting, as a kid, I wasn't collecting stamps or Pokemon cards, and it felt like it was those people that were really believing in it. And maybe they over believed in it. I mean, obviously, like they believed in it so much, probably they didn't sell. But yeah, like knowing your meta. Are you at the smart side of the meta, or are you just figuring out?
I think that, you don't have to catch them all. This is not Pokemon. This is like trading. It's okay if you miss a meta, if you miss a trade. It's hard to do. Like the FOMO is so strong at times, especially when you see friends being up like 100, 1,000 X. I just made 5 million, I just made 10 million. You're like, dude, I was just like at the beach. I didn't even see this happening. It's fine missing those things. It's even more important not losing money while this is all happening. So yeah, there's always an next trade. There's always a next meta. And you need to have this belief of abundance in trading. And if you do have that, it unlocks a completely different side of you. So
yeah, I mean, I guess that's the most actionable thing is there's a lot of FOMO. Everyone's always FOMOing into whatever they're hearing about. But the reality is, the professional traders, the ones saying that, it came from crypto Twitter, I think it was the MGNR account. They just had this saying that all the traders loved. We loved this saying. And it just says, all you need to do 5 times a year, there's free money on the floor. Do nothing and just pick it up those 5 times and you outperform.
100%.
And so that should kind of give you a baseline of how often you really need to do something. Look, when there's free money, you do have to size appropriately,
right,
and have conviction. A lot of the skill is figuring out, is this one of those situations like where the risk reward is very asymmetric? But you really don't need to be trading all the time. And yeah, like FOMO is the portfolio killer.
And I'd say that, and the best traders in the world are going to admit this in every single market, that most of the time, like maybe 90% of the time, people don't even know what's going to happen. They don't have, it's just impossible for them to have enough conviction to size materially into a position. So even these traders, they try to not trade. It's just picking when to trade is an art in itself. And that's usually like 10% of the time where you, as you're saying, going deep and taking these positions. So yeah, fully agree.
The final things, of course, are structural, like understanding the markets. This is kind of where a lot of education comes in. We have things like perpetual markets, which I often talk about are, this weird crypto thing doesn't exist in traditional finance. You have things like funding rates. You have a lot of weird situations going on with perpetuals. So anyone that really wants to take trading seriously, I think it needs to understand, especially for alt markets. Otherwise, sticking to top 5 coins like the majors, BTC, ETH, SOL, these kind of things, is a lot safer. I think going down the risk curve is usually where things go wrong. The other thing is trading fees. People surprise me that they don't think about trading fees at all. But if you're paying, 30 bips every time you do a swap, or in some cases, if you're doing on-chain trading, sometimes you're paying 2-3% slippage.
Yeah.
It really adds up. So if you're doing this anything more than recreationally, trying to optimize trading fees, as boring as it is, it really like adds so much money. And I think, exchanges like Lighter that we're seeing now offering 0 trading fees,
Incredible.
it's such a natural evolution because retail should not be trading fees. And if you look at TradFi, it's all payment for order flow. You're already giving a service to the exchange by trading. So
Do you think that's toxic? Like, what do you think about that? Is it a problem that we're moving towards that kind of setup in crypto?
I think retail volume is so valuable that it makes sense to try to give them 0 trading fees. The problem with crypto is it's all on chain. No one really knows if someone's retail or not. I mean,
Hmm.
I can spin up 100 accounts and make them look like a sheep, but it's just Jordi the wolf behind wearing the sheep thing on top.
Right.
And so there's a bit of cat and mouse game, but we've always had that in crypto. We've had the Sybil, Sisyphus sibling every chain.
Sisyphus Airlines.
We've had these things happen. I think now with AI as well, it gets easier and easier to spin up 100 versions of yourself. I've talked about the need for things like, verifiable identity on chain, ZK, where, something like WorldCoin, where you're using these tools to say, I'm an individual human. This is not a Sybil. And I'm not going to tell you anything about myself. You're not going to get my passport number, but you will be able to at least, give me 0 fees because you know that I'm a human, this kind of thing. So I think the market's going in this direction.
Who's building this? That's actually a great idea.
I think we're going to have to build it ourselves.
I'd have to. Wow. It's good.
Yeah. All right, let's go a little bit personal. What's the worst loss you've ever had? Can you remember something where it just felt like it didn't take you days to recover? Because crypto sometimes it really surprises you. Did you have something where you couldn't sleep?
Yeah, I think it was just like, do you remember like the Avalanche on-chain season? That was 2020.
This was
On
when
2022.
everything was like the theme was everything about like ice.
Yes, Snowbank, Snowdog.
Okay.
Okay, so I think I had made a lot of money on Snowbank. So back then, we had a great chat with Ansem, Sad Start, like really big personalities from the previous cycle. And anyway, we had all made a decent amount of money on there. Snowbank specifically was a strong one. And then Snowdog comes live, which is like a meme related to Snowbank. And I was like, this is it. I'm putting everything I've made over the past 3 months.
You have all in.
All in.
Okay.
Snowdog is basically what's going to take me to...
Snowdog taking you to Valhalla.
Exactly. And basically 3 months of work, 0, and like 12 hours. This thing completely rugged. And it just was exactly what we were talking about earlier, which is like, you need to think probabilistically and avoid risk of ruin.
Yeah. Something I often talk about is like, having a healthy ego is kind of so important, not just in life, but especially in trading, because you need to have confidence. You're putting a trade, you got to be confident.
Right.
I'm sizing, I have conviction. I'm going to hold it. I'm not going to be shaken out. But then if you're overconfident, and maybe you're delusional and you're confident. You're like, oh, I'm always right. I'm going to be right. You sometimes make the biggest mistakes ever.
Yeah.
And, working on yourself and your emotions is such a big part of navigating volatility. It really is the most important thing that I've always worked on myself.
It's so weird. Maybe it doesn't resonate with people, but it's a way to meditate, right? It's a deep intellectual exercise. It really is a mental game. And that's actually what drives me more than, the money itself, and what makes me passionate about trading in these markets.
Yeah, having a good process always involves not being results oriented, because you might buy the wrong thing for the wrong reason and it goes up massively, and you might have the right trade and something happens. So thinking probabilistically kind of grounds you.
Yeah.
And, I play a lot of poker. It really kind of always reminds you that you can make the right decision, you can have the right odds, and you can still lose. And so this is like why I encourage a lot of our traders and other people to at least, play some poker and just keep that mindset in mind. Okay, 2 more minutes. Last thing. Obviously, crypto is still driven by a lot of influencers, KOLs. We had, some of them on stage earlier today. We'll have some more later. As professionals, do we listen to these people? Do we ignore them? Do we have to know who's good and who's not good? Are they all bad? Like, how do you think about?
Yeah, it's not black or white. There are some people that have been able to establish large followings because they're actually very sharp, competent, understand narratives, trade well. And there are some people that are just doing it because they're able to farm attention. I think everyone is kind of able to understand the difference between those two things and just pick the ones that actually provide value. And I think the good test is like, is this person making me think harder, or is he selling me a pipe dream?
Yeah.
Because he or she has an ulterior motive.
I think the only people that I've consistently actually listened to are the ones that they are on the public leaderboards.
Yeah.
So, or back in the FTX days, you have like high stakes cap, you have those people, and then Bybit, you have DeFi Squared, you have
Graph is an incredible one and a good
GCR.
Flood, incredible trader as well. Sisyphus is an incredible trader, even though he doesn't share too much on the timeline.
Well, some of them you have to be careful because they're usually trying to psyops the narrative into happening.
Yeah.
But at least, having a public display that you are good at your craft already eliminates 99% of the LARPs. So yeah, basically the message is, be careful who you listen to, because if you're surrounded by the wrong ideas, you're already dead in the water. So cool. All right. Thanks everybody. Hope you enjoyed the chat.
Thank you guys.